I'm really looking forward to talking about the new partnership we have as the official bank of the National Basketball Association. It's another step forward, building on the momentum that we've had in the last 6 years. We just finished, as you mentioned, 2023 with record revenue, our first quarter of GAAP profitability exceeding 7.5 million members. And it's a real testament to the fact that we continue to march towards our long-term goal of being a top 10 financial institution. We're taking to the next level now with this partnership.
Anthony, since we are on the topic of sports here, you're obviously talking about your partnership today with the NBA, but you've obviously got a huge presence in the NFL as well. I wonder if you can put your hat on as former NFL CEO to talk about what the sports landscape is like right now. It feels like we're looking at a really fragmented landscape, and I wonder from the league perspective, what you think the viewing experience is likely to be like.
I actually think it's a golden age for professional sports, college sports, and live sports generally. It's a golden age for them because for the first time, they're occupying over 90% of the most popular shows with the largest unduplicated audiences. The fact that the National Football League during primetime Thursday night, Sunday night, Monday night is still aggregating over 20 million unduplicated viewers in one sitting is incredibly unique.
This has been an absolutely huge week for SoFi, who earlier this week on Tuesday partnered with Boston Celtics small forward Jason Tatum and became the official bank of the NBA. Obviously huge, and I want to talk about that. But also this week, ARK Invest more than doubled their position in SoFi in one single day, and the list of largest commercial banks by assets came out, placing SoFi at 75th spot for the largest banks in the US. Lots of news to talk about. Let's jump right into it. Okay, so there's obviously big news we want to jump into with regards to the NBA, but let's go into that chronologically. As always, if you're new to this channel, I do SoFi news recaps on a weekly basis every Friday. If you want to follow along, subscribe to the channel for more. This week, SoFi stock closed up 3% as of this recording on market close on Friday. We saw a big drop on Tuesday where basically the entire market dropped as a result of macro news that came out, and SoFi has been slowly regaining that momentum. The stock closed out the week at $8.36. Last weekend, I saw news around SoFi web traffic being up. Tanner posted a chart here, and this chart is pretty encouraging. We're seeing a gradual uptrend in terms of web traffic. Now, we know that web traffic is not a direct correlation between members, but it's definitely a pretty good indicator for us to get an initial idea of what we can expect from a member's perspective. It's a positive sign that this is trending upwards. On Monday, SoFi posted a teaser on X, and off the bat, if you've been following the company for a while, you know that this is a fairly rare occurrence. Usually the company does not tease releases, they just go ahead and release stuff. So not only did they release this teaser, but they also included some Easter eggs within that post, clearly hinting at something to do with basketball specifically. I made a full YouTube video filled with speculation on what I thought it could be, and basically I concluded that this was either a partnership in basketball or in F1, but I called that video SoFi sponsoring an NBA team, ? I guess I wasn't thinking big enough because the next day, on Tuesday, SoFi announced that they were becoming the official bank of the NBA and partnering with Jason Tatum, similar to the partnership that they have with Justin Herbert. Absolutely massive news. And really, in that video that I created on Monday, I talked about my own speculation and shared some overall thoughts around SoFi's brand strategy, around their marketing centered around sports in general. I think this has been positively validated by SoFi Stadium. And earlier this week, on the back of that NBA news, Anthony Noto was on Yahoo Finance talking about this, talking about the impressions that they got from SoFi Stadium and how that creates a repeatable pattern. So just listen to what he has to say.
Anthony, lastly, what does it mean for companies like you that want to have a presence in all things sports? What does it do to the value of those deals, and how can it be easily afforded?
The value of those deals only go up. When we did the NFL stadium rights deal with Stan Kroenke and the Los Angeles Rams, as well as the Chargers, we looked at primetime television. Most people don't understand we did that deal for television, for reaching large unduplicated audiences. I had a thesis that we would get 4 to 6 primetime games at SoFi Stadium. And at 20 to 25 million unique viewers times 4 to 6, we would get a larger reach and an ability to hit an audience at a lower cost than we were paying for television. And what we do when games are at SoFi Stadium on a Monday night is we run ads during the game. So they're not only are they aware of the brand, but they actually understand what the brand stands for. And guess what we do the next Monday night? We run the ads again because the same audience comes back the next week, even though the teams are different. And so it's easier to reach people 10 to 15 times in a season by partnering with the NFL. The NBA, same story. They have even higher frequency with multiple nights of primetime television throughout the year. And so our partnership with the NBA is about being there with them, a credible brand, about reaching their large, unduplicated audience. They have 200 million fans behind the NBA, and it's another way for us to continue to reach audiences that we need to penetrate and that we need to build trust and reliability with as a household brand name.
So really here you can see that they're thinking about it from an impressions point of view and a TV spot point of view from the millions of impressions that they create. And really just to dilute that, the long story short is that they can get a much bigger bang for their buck through sports than through any other medium. Anthony Noto also had some thoughts around streaming in general, around where sports is going in general, which is also really interesting. Their full interview is going to be tagged in the description. I think it's about 7 or 8 minutes. Really interesting interview. I continued on Tuesday to highlight some of the synergies around this brand strategy for a company like SoFi, right? Like I said, they've proven this out with SoFi Stadium. They've proven that this is a scalable marketing approach to increase the unaided brand awareness for the company. Right now, they're sitting at 8 or 9% unaided brand awareness. Back in 2018, they were about 2% unaided brand awareness. Somebody like a Wells Fargo or a JP Morgan would be at 25% unaided brand awareness. And so through sports, more people are exposed to SoFi's branding, to their logo, to their mission, to their products. As a result, when you ask somebody, hey, what bank would you recommend? Or what financial service product would you recommend? What broker, so on and so forth? SoFi is a name that they are aware of, and that comes to mind for them to recommend that out. And that's the whole concept around unaided brand awareness, so that we can have a network effect through word of mouth because they know the SoFi brand, and we're not so linearly tied to customer acquisition costs and marketing spend for every customer we get. We get operational efficiency after time because we spend for one person, and that person, just because the product is good and they know the brand, spread it out to 3 more or 4 more people because they really enjoy that product offering. All I'm trying to say is that in that explore versus exploit model, SoFi is definitely in that exploit phase right now. They explored with different marketing strategies to see what works, what doesn't work, and now they are exploiting what does work. So NFL, the TGL, now the NBA. I made a poll on X and I asked people, what sport do you think SoFi should expand to next? Because right now we have significant confirmation that, it's very likely that they will expand into another sport next. The winning sport, interestingly enough, was soccer, or how the rest of the world calls it, football. And the reason why this was interesting was how geographically concentrated certain sports were. If I said cricket, that's mostly Asia and less so North America. But if I say baseball, that's mostly North America and less so Asia. Right now, SoFi is in the NFL, in the TGL golf, and most recently in basketball, in the NBA. So these sports are all predominantly US based. This is strategic because SoFi is predominantly in the US, right? And so you want to be able to reach the users in a geography where your product is actually available, right? However, as the company expands geographically, which we know is on the roadmap over the next couple of years, this could also be a consideration from a marketing perspective on the corresponding sport that they want to break into those new markets with. Let's say SoFi expands into Asia, cricket is a sport that they consider, or maybe into Europe, soccer is a sport that they consider, so on and so forth. Like, that's a way we should be thinking about it if we're using sports as a pure framework to measure all their marketing campaigns and their geographic expansion. Of course, if you're thinking about just the US, I think baseball would be a fairly low-hanging fruit. Even soccer over the next couple of years, I think, is going to have an increased popularity in the US simply because the World Cup is coming to North America over the next couple of years, and also because Messi is now in North America. So he alone is bringing a newfound popularity to that sport. But again, these are just some high-level thoughts. Of course, this is going to be an increase in exposure, and as a result, it's going to drive new members. At least that's what the underlying target is. This is a multi-year partnership with the NBA, and we know SoFi's brand image aligns with the NBA's image, leading to a positive synergy between the brands. We don't know exactly, though, how much SoFi paid for this. Of course, SoFi as a company is guiding to be sustainably profitable on the bottom line every single quarter going forward. So we know that it won't be like a gigantic price tag that would put their profitability at risk. It's probably going to be spread out over time, and it's probably going to be a number that contributes to the customer acquisition cost, which is probably going to go up. But we will have more specific insights around the cost of this partnership over the next several quarters as we get more face time with management. Essentially, they're going to be talking about it, they're going to be asked about it from analysts, so forth. Right now, however, all we do know is it's a multi-year partnership, and we know some of the specifics, mostly focused around the benefits of this partnership. But of course, the actual expenses, we're going to find that out a little bit later. Now, we're going to talk about this more in depth on the SoFi Weekly podcast. So I want to make sure that, number one, you tune into that. And number two, I can keep going with some of the other pieces of news because I feel like I can go on this topic for a long time. Keeping with the chronological order of news, I saw on Wednesday, people tagged me that Vanguard had increased their position in SoFi by 20%. A quick search on Fintel just validates this. As I mentioned before, with regards to institutions, many of them are funds that serve as custodians, so I don't really read too much into institutional ownership specifically. However, one that I do look at, on Thursday, we also got news that Cathie Wood's innovation fund, ARK Invest, more than doubled their position in SoFi in a single day. Across both ARK-K and ARK-F, Cathie Wood's funds purchased over 2.8 million shares in a single day. And this is actually the first purchase that we've ever seen of SoFi in ARK-K, which is the flagship fund. This is the main one. Usually we see purchases of SoFi in ARK-F, which is the FinTech Innovation Fund. Now, obviously that's big news because in a single purchase alone, they more than doubled their position in their combined total holdings of SoFi across all of their funds. Obviously very positive as ARK continues to build a heavier position in the company. I think Kyle reported on X that around 5 million shares now, ARK has broken into the top 10 institutional ownerships of SoFi. I would expect them to keep buying more. Generally, when we see ARK buy, they usually buy in quick succession. So maybe they even bought today. I'm not quite sure because the numbers are not out as of this recording, but we'll probably know by tonight if they bought even more. Now, on Thursday, we also got a Form 144, which highlighted that SoFi's president, Chad Borton, is selling 12,000 shares. And I made a very clear post on X when I shared this news to clarify that this was for tax reasons and as a result of the restricted stock units vesting. We've seen many similar sales from Chad Borton himself back in December and November. We've also seen sales from executives selling in November for the same exact purposes. This is nothing major. It is inconsequential. Executives sell all the time so that they can unlock more shares. And I really wanted to preface that because people always jump to drastic conclusions where they think executive selling means that some bad things are going to happen with regards to the company. But in this case, it's for tax reasons. Finally, on Friday, I was tagged around the latest update of the commercial bank numbers being released, wherein SoFi is now officially ranked 75th largest commercial bank by assets, with over $24 billion in assets. The last time we had an update on this list, SoFi was in the 80th position with around $20 billion in assets. And as I've mentioned in previous videos, in fact, this was also one of my 2024 goals for SoFi was to increase this number. I expect SoFi to continue to increase their size by assets, but at a slower pace. At some point, this is going to plateau, and SoFi is not going to be climbing by, leaps and bounds. They're going to be climbing by very small amounts because the numbers get significantly larger the higher we go. However, for all of these news, with in-depth discussion and commentary, join us later tonight on this channel for the SoFi Weekly Podcast. We're going to be talking more in depth around the NBA partnership. We're going to be talking more in depth around the bank numbers specifically. So make sure you join us there. For right now, terrific news for SoFi. I mean, this has been one of the most eventful weeks for SoFi. We don't really get partnerships like these all the time. So I'm very excited to be talking about it. And over the next couple of weeks, share more thoughts about this partnership as we get more details. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.